Minnesota is one of only a dozen U.S. states that still impose a state estate tax on top of the federal estate tax. And if you are a Minnesota resident and pass away with an estate with over $3 million, your estate will owe Minnesota estate tax on the amount above that threshold. There is no portability in Minnesota, so Minnesota does not allow married couples to combine their estate tax exemptions, unlike the federal estate tax. This makes proper planning critical for couples who own assets above that $3 million threshold. Another consideration are gifts made before death. Any gifts exceeding the annual federal gift tax exclusion, which is $19,000 for 2025, that are made within 3 years of death must also be included in the Minnesota taxable estate. And last, entity ownership. If the Minnesota property, for example, is owned through a pass-through entity like an LLC or an S Corp, the Minnesota Department of Revenue will disregard the entity and treat the decedent as if they personally owned the property. We know this is a very complicated topic, but I did want to make our listeners aware of this today because I think a lot of times this ends up being a surprise, not for you, but usually for your heirs.
Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategy.